And this problem is one of the main things in this chapter that you will really have to know. So the cost of goods manufactured and the cost of goods sold is a key component of the chapter, and I can guarantee you it will definitely be on your midterm, so listen up. So we're going to start off by looking at our schedule of cost of goods manufactured. And of course, what I'm going to do here is tell you where all the information is coming from. And one thing you should pay attention to is the formatting. So if you get the format right, if you remember how to lay out the problem, you shouldn't have any trouble then in actually finding the information and putting it into the right spot. So that's a really good tip in terms of knowing how to do the cost of goods manufactured. So for the first one, the beginning work in process inventory, you were given that figure of the 50,000. So of course what this means is that was left over from the previous period. So whatever is left at the end of the previous period is the beginning balance of the current period. So now the next thing you're going to have to do is you want to calculate how much direct material that you have used. So you're not given this information, exactly the amount of direct materials used, so you're going to have to calculate this number. So here we see the beginning raw materials inventory. So it's important to note that the term raw materials is really the same as direct materials, so those terms can be used interchangeably. So you're given your raw materials at the beginning, the 25,000. You want to see, well, how much have I purchased during the year, and you're given that information as well, 78,000. So the total materials that you have available for use, your direct materials or raw materials, both terms mean the same thing, it's $103,000 worth. Then you want to figure out, well, how much did I actually use during the year? So what you do is you say, okay, this is what I had available for use. This is what I had left in my ending balance. At the end of the period, you had $28,000 worth left. Subtract the 28 from the 103. So this means you must have used $75,000 worth of raw materials. The next component of your cost of goods manufactured is your direct labor, and again you are given direct labor costs there in the problem in the text. Now the next thing that you want to calculate is your manufacturing overhead. So your manufacturing overhead, it's not going to be identical for every problem that you look at, but there's some similarities. So here you have indirect labor. So that could be the labor, for example, for the supervisor, for the janitorial staff, etc. So indirect labor, insurance on the plant. So if you were given insurance on the head office or the administration, you would not include that. So it's only expenses, overhead related to the actual manufacturing facility. So it's insurance on the plant and depreciation on the plant, building, and equipment. So all that's part of overhead because you can't operate the building without it. So what you're trying to do is you're trying to identify all of the cost that you need to operate that building where your product is being manufactured. And repairs and maintenance, so you only want to pick up repairs and maintenance on the plant. So if you have repairs and maintenance on your overhead or on your administration building or your head office, you wouldn't include that here. So in this particular instance, we have the four categories of overhead, manufacturing overhead, and they add up to 41,000. So you have three components in your cost of goods manufactured. You have the cost of your raw materials or direct materials you've used, the direct labor that you've incurred, plus the overhead. So together, the total manufacturing costs incurred for the year is $198,000. Now, what you want to do, of course, is figure out, okay, for the costs that I've incurred, how much was actually completed? In other words, what was what were the costs going into my cost of goods manufactured. So to account for that, you now scroll down. So here, the total cost that you have to account for is your beginning work in process, then all of your manufacturing costs for the year, which is your materials, your labor, and your overhead. So 198, and I'll just scroll back here again. So 198 plus your beginning work in process. So the beginning work in process, this relates to goods or products that you were working on last period, but you didn't finish them. So they were brought into this year's opening balance, and you're going to work on them and finish them this year. So your beginning work in process, 50,000, plus you incurred another 198,000 during the year. So you have a total manufacturing cost to account for is 248,000. Now, it's important to remember that's the cost incurred, the 248,000, but that's not your cost of goods manufactured. What you have to do here is you have to deduct your ending work in process. So, of course, in most business organizations, you don't actually finish every product that you start on during the period. You're always going to have some that are partially finished at the end of the year. So in this case, you had $35,000 worth that was partially finished at the end of the year. So you subtract that from your total manufacturing costs incurred to come up with your cost of goods manufactured. So it's 213,000. So what this is doing essentially is looking at what did you bring into the period that was partially finished, how much new product did you work on during the year, and then subtract from that what you had left unfinished or in process at the end of the year. So we have $213,000 worth of cost of goods manufactured. So now the next thing we're going to look at is calculating your cost of goods sold. So you did all of that calculation just so you could come up with this 213,000, the cost of goods that you actually manufactured or finished. It also means finished during the year. So it's manufactured or it's finished during the year. So the next thing you want to do now is scroll up here. Now you want to look at your cost of goods sold. So you know how much you manufactured. So now what you're doing here is you're looking at your finished goods inventory at the beginning of the year, because at the beginning of the year you're always going to have goods that you had completed, were available for sale but didn't sell in the previous year. So you still have those in your opening balance at the beginning of the year. So your beginning finished goods is 18,000. We know we've manufactured what we just calculated, $213,000 worth this year. So the total goods available for sale is $231,000, and you are given your finished goods inventory, so you know you had left $25,000, and this information can come from your computer system, or you might also be doing a physical count. You might actually go out and count the number of items left. At the end of the year, you typically would count the items to make sure they agree with what's on your computer system. So here you had $25,000 worth left, not sold at the end of the year. So the amount that you sold was $206,000. So that is your cost of goods sold, and when you're preparing your income statement, this is the number you subtract from your sales figure. You have your sales less your cost of goods sold. So there's quite a few calculations to go into this figure to get your $206,000, because that's the number that you're going to be using on your income statement. The ending finished goods inventory, that $25,000, that actually is an asset, so that will show up on your balance sheet. So that goes to the balance sheet. Okay, and that concludes problem E-26.